All right, our first historical example is going to be the Soviet Union. The Soviet Union implemented a planned economic structure called material balance planning. This was a totally planned economy where the inputs and outputs are completely balanced. In theory, you significantly reduced any waste in the economy, and the government would plan and allocate appropriate resources to provide services, goods, jobs, and wages for the entire population. This on paper looked very viable. This looks like hey, you could balance out your budget between the inputs and the outputs, and then you would just run this efficient economy. The agency in charge of the entire economy was called the Gosplan. The Gosplan was the central planning agency that set production levels along with prices. They would also determine the jobs needed for the production quotas and how much jobs paid in wages. Through material balance planning, could balance both sides of the equation. The outputs would equal the inputs. The budgeting, the forecasting were so crucial to Gosplan's efforts. Production goals were set by specific locations, and the planning would flow down based upon forecasts and budgets. To finance Gosplan's budget was Gosbank. Gosbank was created as the central bank of the Soviet Union. Gosbank was also the bank for all individuals of the Soviet Union. Wages and payments were handled through Gosbank, where it could be fully tracked and traced by the government. Basically, anything, whether what you got paid, you're submitting an invoice, no matter what financial transaction happened in the Soviet Union, it went through Gosbank. And they were able to fully track all transactions through Gosbank. As we mentioned with Gosplan, they set production, they set pricing, they set wages. There effectively was no market price. There was no supply and demand being factored into this economy. It was fully planned out. The effects of supply and demand had no impact to prices. Wages experienced the same effect as well. With no market prices to judge supply and demand, the value of a job and subsequent wages were not based on the demands of that job. It was at the decision-making, forecast, and budgets of Gosplan. They determined what those jobs paid, so if they valued that job more than likely the wages would be higher for that job. This meant that money was an expression of labor, and it also meant the value of a good could not be rationally priced. You just could not look at the price of something in the store and rationally be like, okay, that's what it's worth, because there's no supply and demand forces. There's no market forces upon that price. It was set by the Gosplan, and that is the price that they determined. Gosplan production budgets and forecasts, as you can imagine, complicated. Gosplan would plan for more than 20,000 items, and since there wasn't a profit motive, it was really challenging to judge company efficiency. How efficient were these companies? What was the return on investment? It was totally planned out. You don't know if you're being efficient. You don't know if the return on investment was good. You have no idea. And how do you allocate capital? What items are going to be high in demand and what items are not going to be high in demand? You kind of have to say, okay, where am I going to be allocate resources? Where am I going to allocate capital? Knowing that I'm going to have a high demand for this particular good or service. It's really hard to judge in this type of planning. So what happened? The Soviet Union during this economic effort would experience shortages and surpluses. They would face those extremes very often because it was next to impossible to forecast demand and budget for such a large population. This led to food and medical shortages. The economy was not efficient without properly forecasting the demand for the year. And that's almost impossible to figure out on a year-by-year basis. And when you don't get the forecast and budgets correct, you end up with surplus goods and services in certain areas, and you end up with shortages in other areas. And unfortunately, a lot of the shortages ended up being with food and medicine. Bartering was common in this economy. People would barter for goods and services, but even that was challenging to figure out the value for one good or another. Gosplan's planning was impossible. How do you forecast 20,000 items and price them and give them production quotas each year? It's impossible to plan for that. And the value was also impossible to judge. With no market prices of goods and services, you did not know what a price represented. Without having a market, it did not necessarily represent a good or service that people wanted. Was it a good that was in demand? Was it a good that was not in demand? Well, that was up to the Gosplan if it was something they deemed would be in demand and would set production quotas for.